Good morning, everyone, and welcome to Finance and Bagel for your daily dose of financial news updates in less than 10 minutes. So let's dig in with today's agenda. We have three main points to cover. Number one, interest rates and the Fed monetary policy. Number two, commodity prices that are heading higher. And number three, two M&A deals in the US. So let's start with the interest rate. What happened last week on Wednesday with interest rates? Well, we had the Fed governor, Mr. Christopher Waller, that said word for word that there is no rush to cut the policy rate. So that has taken the market by surprise a little bit, as we were all expecting at least one rate cut before June and then three rate cuts in total this year. And that was confirmed a little bit later last week on Friday, on Good Friday, even though the markets were closed. Jerome Powell, so the chairman of the Fed, said that indeed the Fed is waiting for more evidence that inflation has been contained before deciding to cut rates. So that's changing a little bit, the market sentiments, what investors have been expecting from the Fed for this year. Let us know in the comments down below if you think that we will see at least one rate cut before June, and if otherwise, this year, do you expect to see still three rate cuts, or with what happened last week, now you may be readjusting your assumptions to maybe one or two rate cuts only? Let us know in the comments section down below. Number two on the agenda today, commodity prices. Have you seen those prices? Prices of gold is at an all-time high of $2,232 per ounces. It's a record. On the same note, oil prices have been increasing and gaining for the last 5 months since last October, reaching now the WTI crude is now $83 a barrel. So that is supported by two things. First of all, on the supply side, if you remember what the OPEC Plus said at their meeting in March, they said that they are going to cut production for the second quarter of the year, so until their next big meeting in June, and they're going to reduce their production by 2.2 million barrels per day. So that's pretty huge, And this week, also last week, Russia, which is part of the OPEC Plus, mentioned that they are also gonna do efforts to reduce their outputs, their production outputs too. And on top of that, recently we've seen some attacks on Russian refinery, potentially by drones. This also could be impacting the capacity that is coming out of Russia. So all in all, on the supply side, supply is to be contained at least until June. So that is supportive of higher oil prices. And I think that's what you should expect, all things being equal, until we hear more about their strategy at the end of the second quarter. Now, third point, as I mentioned, M&A. M&A, what's happening in the US in the consumer's discretionary space? Well, Home Depot, yes, the big American home improvement retail corporation, is making yet another big acquisition. It's an acquisition of a company called SRS Distribution. It's focused on roofing supplies for roofers, professionals, and they're acquiring it for $18.25 billion. So it's a sizable acquisition. Home Depot market cap is $380 billion. So they're adding another $18 billion of enterprise value with this deal. But we think, the deal is really in line with the company and management's rationale of Home Depot of increasing their focus on pros and professional in their business. They're paying a fairly high price, I would say, for the deal at 16 times last year's EBITDA and 13 times 2025 EBITDA. So it's a good acquisition. It's fairly priced, and we'll see, going forward how that plays off for Home Depot. But I think it's a positive for the company's overall strategy. Number two, it's not exactly a deal, but it's more of a rumor and an indication. Last week we had more and more indication that in the fashion space, in the retail fashion space, and especially the high-end luxury department store, we might be close to something, to a deal, because Hudson Bay, the owner of Saks Fifth Avenue, has been appraising their assets, their flagship assets in Manhattan, New York, 611 Fifth Avenue, for $3.6 billion. So we received the valuation report, and it's been very positive. So we think they're doing this because they're structuring a deal, and they're probably in talk with banks to raise some financing. And just as you and I, when we are looking for financing in those kind of rate environments, banks are going to ask for collateral. So we think they're going to pledge that asset as collateral for a potential deal. And you know, as early as last December, we saw them, Hudson Bay, trying to acquire the other high-end department store in the US, Neiman Marcus, for $3 billion, but the bid got rejected because the board and investors said the price was not high enough. So we think that right now a deal might be, you know, in the books because they are preparing themselves on the financing side. But you know, all in all, we'll keep following the story and see, you know, like what happened, because we have no more information on this. One thing that is positive as a read-through for investors that invest in commercial real estate is that key prime location assets values in the retail space have been increasing, because in 2013, so 10 years ago, Hudson Bay bought the asset for $2.9 billion, and as of today, you know, the reports value the asset at $3.6 billion. So that's an increase of 24%, which is pretty, you know, reasonable, and in considering the current environment. So very positive on that. On that note, you know, I'll let you go on with your day. Before that, don't forget to comment down below if you think that the Fed is going to cut rates before June, and if so, how many rate cuts should we expect this year? And remember, this is a new channel, so your support means everything to us. If you like the content, please like, comment, subscribe, activate the notification bell, and we'll be back tomorrow. So have a nice day and see you. Bye bye.